This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Market Wrap.
This is the Market Wrap. I'm Jack Lott here on a Wednesday. This is the James Dix Financial Network. U.S. economic activity has slowed over the last 6 weeks, according to the latest Fed Beige Book report on current economic conditions. Anecdotal reports from the 12 Fed districts suggest economic activity continued to expand in all districts in September and early October, but the pace of growth decelerated since August. Prices paid by U.S. consumers rose more than forecast in September as food and energy costs climbed, while core measures showed inflation remains contained. The 0.3% increase followed a 0.1% decline in August, which was prompted by falling oil prices. The core CPI rose 0.2% for a second month. That was in line with analyst forecasts. U.S. home builders continue to cut back construction in September, starting construction on the fewest number of new homes in more than 14 years. Housing starts fell 10.2% to a seasonally adjusted annual rate of 1.19 million. That's the lowest since 1.32 million in March of 1993. International Monetary Fund lowered its projection for the global expansion next year to 4.8% in its semi-annual World Economic Outlook from an estimate of 5.2% in July. A weaker outlook for the U.S. was mostly to blame as the fund reduced its forecast to 1.9% from 2.8%. And the government announced that starting in January, Social Security benefits for nearly 50 million Americans are going up 2.3%. That's the smallest increase in 4 years. It will mean an extra $24 per month in the average Social Security check. In earnings news today, lots of them. Altria Group, the world's largest tobacco company, said profit exceeded analyst expectations on higher cigarette prices and top-selling Marlboro's growing share of smokers. It raised its full-year forecast. Third quarter profit adjusted for Altria's spinoff of Kraft Foods increased 19% to $2.63 billion or $1.24 a share. Coca-Cola said income increased 13% to $1.65 billion or 71 cents a share. Sales jumped 19% to $7.69 billion. J.P. Morgan Chase & Company reported income increased to $3.4 billion or 97 cents a share in the third. United Technologies said earnings rose to $1.2 billion or $1.21 a share. That's up from $996 million or 99 cents a year ago. Gannett Company reporting earnings falling 11% as revenue slipped from a year ago period, boosted by spending on political advertising. Analysts expected profit of $1 a share. And Intel Corp's soaring sales of microprocessors helped the companies overcome flat prices for those chips and reap a 43% boost in profits in the third quarter. Scheduled economic reports on Thursday include initial jobless claims for the week of October 13th, leading economic indicators for September from the Conference Board, and the Philly Fed Index for October. Earnings on Thursday include Bank of America, Dow Jones, Pfizer, Advanced Micro Devices, Hershey, Capital One, Eli Lilly, and Southwest Airlines. And some of the stocks in the news today included CSX Corporation posting a third quarter profit of $407 million or 91 cents a share. IBM reporting a third quarter profit from continuing operations of $2.36 billion or $1.68 a share. And Apple saying that it cut the price of its iTunes Plus tracks to 99 cents each and expanded the iTunes Plus catalog to more than 2 million songs. iTunes Plus Music is of higher digital quality and is DRM-free with no personal use restriction users are accustomed to with the traditional iTunes catalog. And that is the Market Wrap on this Wednesday. Jack Lott on the James Dix Financial Network.